Thank you for joining us this morning. My name is Alejandro Gonzalez. I'm a partner in the New York office of Scott & Arps, where I lead the banking and finance practice for the region. Again, thank you for joining us. It's great to see so many familiar faces in the audience. So let's get right into our topic. So, in the space of loan syndication, again, we can't deny we're living interesting times, from different perspectives, from compliance, regulatory, political, macroeconomic perspectives, which of course present challenges for corporates to achieve or secure financing for their corporate growth and operations. So this morning I will have the pleasure of moderating for the next few minutes a discussion by a fantastic group of panelists with very diverse backgrounds and roles, and which will help us. Again, they will guide us through a discussion about the recent experiences in the market, what they've seen in the loan syndication space, and other alternatives to financing, and discuss challenges or their views of current challenges in the midst of what is going on around the region. And what we anticipate in the foreseeable future in terms of funding strategies and the like. So without further ado, let me introduce you briefly to our group of panelists who I'm pretty sure you already know them well. Let me start with my far right, Gonzalo Cornejo. Gonzalo is the CFO of Mexico Tower Partners, where he's been there since inception, I guess, where you formed the company, now one of the leaders in the telecom tower industry in Mexico, with I want to say over 2,000 telecom sites, and of course who has achieved significant financing to finance the formation and growth of this company. To Gonzalo's left, Francisco de Padua, corporate treasurer of Organización Cinépolis, I want to say. Different corporate names along the structure, but we all know Cinépolis. Cinépolis is the largest movie exhibition company in Latin America, second largest in the world in terms of tickets sold, with operations, of course, in the U.S., Latin America, Asia, and Europe. To my right, Yvette Frost, senior representative, chief representative for EDC, where Yvette has been at Export Development Canada for over 20 years now, leading the efforts in the region and providing support to every operation in the countries where they are active. Last but certainly not least, to my left, Jose Jaramillo. Jose, Chief Financial Officer of Red Energía de Perú, where you've been for over 13 years at Grupo ISA, now leading the efforts on the CFO front at REP, or Red Energía de Perú, where again the growth has been as well significant, and views are always very welcoming and very impressed, right? With now over 78 substations, and I want to say over 11,000 kilometers of transmission lines, right? So, again, it's very, very diverse and very interesting to hear views as to what their experience, challenges, and foreseeable future will be with them. So, let's dive into our topic this morning. Just to set the base, why don't we start with you, Yvette? What do you see, in terms of, again, recent lending activity? What has been, the bulk of, the trends in the regions, particularly in those countries where you operate, that you've seen, EDC particularly active, and other banks?
So I guess this year, so EDC is Canada's official export credit agency, but we do operate under commercial principles. And so 2017 was really an exceptional year for EDC in Latin America. Record volumes in Mexico, Chile, really strong results in Colombia, Peru, Brazil. And those are really our key markets. In total, we signed about $7 billion of loan financings in Latin America last year. We do primarily lend in the top tier corporate space by way of either participation in clubs, syndicated loans, occasionally private placement, as well as bilateral agreements. We do both local currency and US dollar loans. This year in Mexico, we're probably going to do 50% of our new financings in pesos. So we really do see a trend towards local currency financing. One of our key offerings is what we call our connection financing, in which along with our normal financing, we collaborate with the company's business and procurement teams in order to leverage our knowledge and relationships to introduce the company to suppliers that can help solve some of their business challenges and give them a competitive edge. We do offer our connection financing in traditional sectors like oil and gas, mining, automotive, and infrastructure, but we're also increasing our transactions in the retail sector to companies such as Soriana, Cinemex, and Cencosud in the region. So I think on the whole, what I would say is busy year, lots of liquidity in the market, and a lot of competition out there.
It was, we just need to flip, to the Ryan Movie Exhibition Company, wouldn't you say? It's, in terms of the latest financing to cinemas, that was pointed out there. But we'll change that for the next year's conference. Okay, so Gonzalo, let's switch right into you again. As I mentioned, you've been there since inception. You've been, achieving financing in different forms and shapes, and this is not, the cookie cutter traditional corporate financing, but rather a very asset specific, revenue specific, with sophisticated lending sources. So, can you share a little bit about that experience and over I want to say in the last 5 years or 6 years since this was this project started?
Sure. So we started in 2011 from zero. We have two shareholders, two sponsors, Macquarie and Digital Bridge, who initially were basically providing the capital for us to grow. But eventually we needed to get to have some debt. The first approach was to go to the bank market. It was a bit tough for us initially because it was a new industry in Mexico. No one was getting the kind of financing that we were looking for. We weren't just looking for corporate typical financing, but we wanted basically to have a structured finance against our assets. It took us quite a lot of time to be able to put up the structure, and in the end we were able to do it through a consortium of banks, a syndicate of banks. And then we kept on growing, and we wanted to expand again into new areas of financing, which were better for the kind of asset that we have, and in the way that it was done in developed markets like the US. So we basically wanted to copy the model that was used in the US in terms of bonds. So we did an ABS with local investors in Mexico. It was a long process because we had to educate the potential investors, not only in terms of the industry and in terms of who MTP was, but also in terms of structure. It was a novel structure for Mexico, and I would say for Latin America. So it took us quite a lot of time, but in the end, we got there with a big support from different investors. So basically today, the way we're expanding, or we're continue to expand, is through debt via the bank loan market or via capital markets. And for us, it's really important to have the support, because we We do several transactions of M&A per year, usually small transactions, but also could be some large ones. And to have this support from different sources is something which is important and key to us.
Thank you, Gonzalo. I'll hold into the thought of your, again, of that strong relationship and learning curve, I guess, or sophistication, and very specific. And I'll ask you something later on. But let me switch right into you, Paco. So Cinépolis has been has been a successful story of, incredible transformation over the last few years, where it moved from being a Mexican movie exhibition company to one of the largest global players. Is by many metrics, right? But again, just being the second largest, and we're not going to say who's first, but second largest company in the industry in terms of tickets sold, it is something. And that expansion, I mean, we've seen organic growth, we've seen a lot of inorganic expansion through acquisitions around the world, and having teams all over, again, of course, which require financing. What has been the strategy? What has been your experience over the last few years? We were close on the recent large syndicated multi-currency, multi-borrower financing. Again, somehow affording you flexibilities to achieve that. But can you share a little bit about those thoughts?
Yeah, sure. Let me start with maybe a little bit of background.
It's yours.
Thank you. Sorry. You can hear me now?
Yeah.
I don't know if you're very familiar with the exhibition industry, but the exhibition industry changed dramatically around 2008 when we started digitalization. So all the analog projectors were out and all the digital projections were in. And the only way to get the movies so we can exhibit were through the digital projector. So movie business started to require financing. In the past, Cinépolis grew only with their own cash. So we reinvested most of our cash in order to grow. When digital projectors were the norm, we have to require debt. So that's where we tapped into bank debt for the first time back in 2008. After that, the executive committee within Cinépolis saw that the real opportunity in the industry was going to be consolidation, because investing in new movie theaters with the large investment that the digital projectors require, it has to be as a business of scale. So the only way to sustain this growth will require to tap into bank debt. So that's what we did. We paired these two needs of the company, inorganic growth in order to achieve consolidation and large capex requirements, and we're starting with growing our relationship with banks. And we thought that the best way to broaden our bank base was to tap in the syndicated loan market. So back in 2014, we issued our very first syndicated loan facility, which was a multi-currency facility. We broadened our bank base from maybe 6 banks to 17. So that gave us the flexibility to pursue more aggressive growth opportunities. So it's a fact that our relationship with banks have been instrumental to our growth. And just recently, we did our first liability management exercise, also with the help of our main group of banks. And we refinanced our existing multi-currency facility and our existing RCF in a new facility that we did back in 2016. So that was our first liability management exercise, for many to come, because we have been evolving our capital structure. And of course, it has been, as I mentioned before, the support of the banks and the ability to tap the syndicate loan market has been instrumental for us to grow. And I believe that the base of this relationship that we have with the banks has been our ability to be transparent, to be very open with the communication in order to provide the banks enough information about our business model, because they have been used to the way that this business behaves in the US, which is radically different from the way that we do it in Mexico and in Latin America. And of course, communication has been the base to build these relationships with banks. And as a conclusion to your question, of course, tapping this market and having the support of the banks has been one of the pillars for Cinépolis growth in the past few years, and we believe it will continue being one of the drivers of growth.
Well, last you, thank you, Paco. I'll ask you about that relationship and how that will translate into again what is coming on and what the visibility that we have on the challenges today. Jose, last but not least, again on this experience. I mean, you've been with ISA for many years. Currently acting as the CFO of Red Energía del Perú. Over 11,000 kilometers of transmission lines. Becoming being the largest or the leading company in terms of transmission of energy in Peru. So it's not minor. So what has been the strategy, key factors, in terms of funding that? I can't ask you about project by project because, time is critical here and there's definitely a lot to discuss there. But what you can share there as a base?
Okay. We have part of the group of ISA, but in Peru we have 3 companies. One of those is pure bank structure and finance because it's little ones. It's ISA Peru. It's assets. It could be close to $70 million. But we have a strong structure because it's in fixed rate and long-term agreement, which is nice. But on the other hand, we have a rep. We bought 2 operative concessions in 2002. Initially had a big agreement with 2 banks. After that, we get into the local market by bonds in the local market. And we had a strange structure for the local banks, for the local bonds, because it has a structure based on guarantees and the pledge on the shares, and it will be tough at that time. Peru was different in that time than today. After that, this year we released the total package of guarantees in REP. So we have 2 opportunities to increase our depth in the local market by bonus. But we had many relations with the banks. We have 2 loans in REP, which is we would like to refinance the short term. And another company is CTM, Consorcio Transmantaro. When we bought CTM in 2006, it has assets close to $150 million, and today it's close to $1.7 billion. It has a 15 concession contract with the government. For instance, it would be nice to say that our revenues are stable for 30 years, so the grandma's business is our business. But we need to refinance every time because we've been getting into new projects every year. Last year we won a contest in the local market for a big line transmission in Peru. It's close to $500 million. And this year we won another 2 contests in the private side, and it's close to $100 million as well. So in the short time we need to refinance everything. In the past we had a project finance. Today we would like to stay in the corporate side. CTM has a issuance in the international market, and it has 2 big loans with the local market. One to $250 million with BCP, long-term agreement, 12 years fixed rate. And we have with another bank in the local interbank, we have a 9 years tenor and the fixed rate as well. So we had a lot of work.
You have work to do in the near future. Okay, let's move. Again, I guess with that base, let's just switch quickly into the challenges. What is to be run. And Gonzalo, let me start with you. Given of course the current political and economic landscape that we're facing in Mexico, new administration, policies and different views with the U.S. volatility in in currency in the markets. What are those challenges that are you facing right now? Also, if you can expand on whether again you see attractive opportunities as alternatives to bank financings, and how you see this translating into how you're going to accomplish your funding strategy. I think one of the elements that you mentioned before is the value that you place on the relationship banks on the curve of on the learning curve and sophistication of for your very product specific financing. So how you see that interplay in terms of with the challenges that you may see now.
Yeah. I think the largest challenge that we've had so far has been trying to educate investors and banks in terms of what our industry is and the best way for us to finance that. And I think that we have already achieved that. What I see today as a challenge in the Mexican market in specific, all our revenues are in pesos, so we just raised debt locally, is perhaps the rate. Mexico has had again another spike in inflation, and rates continue to go up. This, of course, U.S. going up has also, U.S. rates going up has a lot to do as well. But I think we're getting to, hopefully, to a maximum in terms of rates set out by the central bank, and hopefully they will start to come down. Luckily for us, when we went to the market for a long-term financing fixed peso bond, rates were still attractive. Today, they are not as attractive, so for us would be perhaps waiting a little bit more before we go again to the market and basically securitize another set of assets as we did last year. So I think in terms of depth of the market, in terms of potential investors or banks knowing what we want or what we're after, I think those challenges, we have already overcame those, and now it's more a macro thing in terms of what the new government is going to look like. First things have been, I would say, neutral to positive, especially in our industry. And then the question about the rate is something even more macro than that.
Okay, thank you, Gonzalo. So, on that very topic, Paco, let me switch to you. Again, there's uncertainty as to the policies that will be implemented, right, by the new administration. So when you think of funding not only your corporate growth but your operations generally, your capex fairly intense, what changes in your strategy do you see, and how much value are you placing? I mean, we've seen you very close to your relationship banks, as you mentioned before, that you've been developing these relationships. Again, that are fantastic opportunities for club deals or bilateral deals, or get funding at very competitive rates, but also again having the confidence that will be there. So and I'll pause there for a second. I'll ask you a follow-up question there.
Sure. Well, you have to understand that our industry deals with a very volatile environment, right? We have our income, our revenues come from content that we don't fairly manage. We do not produce the content. Then it's an industry that has been trying to be disrupted since the inception of black and white TV. So anytime we face uncertainty in the future, we take the very conservative approach. That's how we are built, right? It's in the company. So it's within the company. So the uncertainty that we had regarding the political environment in Mexico, for sure changed the way we fund the growth in the company. We switched entirely to Mexican peso, our corporate funding, let's say. We still have, funding locally, like working capital needs around our operations, But let's say the growth financing, the growth funding, we switch it to Mexican peso entirely, sacrificing a little bit of cost, but as Gonzalo already said regarding the rates in Mexico. But we took the conservative approach. Then we free our cash flows in hard currencies, right? We have operations in Spain, we have operations in the US, so we free those cash flows in order to face payment obligations in the future. So we already made changes, and these changes were made on the very conservative side. We hedge all our exposition, rates, currency, completely hedge, 100% hedge, in order to face what's going on. I agree with what Gonzalo was saying. I think that what we have seen recently is neutral to positive. Regarding our industry particularly, I think a lot of money will go out to the people, and people will be able to spend in entertainments such as going to the movies, especially going to Cinépolis, where, let's just an announcement, we hold 2/3 of the market. So we are fairly positive that if the money goes to the people, they will spend it in Cinépolis. And
with those 2/3 of the market, both myself and my colleagues, I see Denise back there, and I'm pretty sure the foreign, funded banks would like to see you funding, again, whatever is left, without something other than pesos. But
Sure.
Hopefully the market aligns there.
yeah, sure, of course. we can talk after the panel for sure.
Okay.
And I mean, it has changed, and of course, uncertainty. We believe that the uncertain remains. I don't think it's over, but we'll see positive signs, and we're optimistic for the next couple of years, and we will see how it goes.
Fantastic. Jose, I think, the question that I face, again, this is different from, again, not necessarily a minor challenge, but it's completely different from the Mexico landscape, right? Peru has been, similar to, what happened in Brazil, Colombia, then Peru, now Argentina, in a wave of a corruption scandal that has affected, the project financing industry generally, right? And, I would say, that coupled with, more stringent regulatory compliance aspects on the bank side, what are those challenges? What challenges do you see in when thinking of this, perspectives that are affecting the industry generally, and how attractive financings are, how available financings are, the right costs, and with the right burdens, to achieve?
Yes, Peru, we have a lot of problems with that, but in the short term, the problem is that Peru has a strong improvement, big infrastructure program. So in this moment, the law anti-corruption in Peru tries to delay the program because create a different problems for increasing the infrastructure. But on the other hand, maybe the auditors on the side from the government for the new project, it will be increasing in the short term. But for example, in our companies in REP, we have a lot of contracts, like addendas in our contracts, and we need to sign 3 or 4 more addendas for our main contract, which is increase our infrastructure, but it's really stopped since 2014, because the problem with the government, it could be when you try to assign addenda, it could be corruption. So it has a passive state in this moment. So I think it's the big problem in Peru. But on another side, we have a problem with the big companies in the construction side, because in Peru we need to construct a lot of things at this moment, and they don't have any construction almost in the list with the problem and the corruption. So in the short term, maybe the things for the strong problem, the companies, it will be the auditors or the anti-corruption side in every company. We have a lot of things in anti-corruption side because we part of the state in Colombia. So we have a strong corporate governance. For us, it will be easy to pass these things today, but I think it's a problem for the market.
Yeah, will definitely affect or is affecting the industry generally, and the speed of execution on transactions, right? Because now we have, more stringent controls. You have enhanced due diligence procedures. You have to change your policies, programs, and compliance officers and the like. So that is definitely reshaping. I guess for the good. But
yeah, for example, in this moment, Peru has a new law for the anti-corruption side. And it will be tough for the normal companies because in the past they didn't have any structure like that. So they're getting involved in the OCDE, which is a new challenge for the country, which is tough. It's tough because it's a speed. We need the speed, and we don't have the speed because the law is
right. And as you involve, the World Bank or multilateral agencies generally, again, that those standards will keep raising, and clearly there's not going to be a lot of speed of execution in terms of financing of these projects. But
yeah, it's a part of a compliance side because it's really tough for this moment, and I think the main problem is the speed. That's speed, because we can't pay past the page because we need to go ahead. We need to go ahead, and that's the speed.
Understood. Yvette, so we listened already to the complaints and challenges and on the corporate side or on the project side. When we think of the bank perspective, and what are the main challenges that you see? And let me give you just some thoughts that come right off mind. We think of over liquidity in the local markets. We see a lot of banks willing to fund in local currency. Again, mitigating that exposure. We see in some instances under local law or govern the documentation under local law, which is problematic or continue for the vast majority of foreign banks. We see as well, while banks are more concerned in certain topics, particularly in regulatory compliance, we see also flexibilities or borrowers trying to migrating to what we see in the U.S. market or in the global markets in terms of covenant light packages and aspects like that. So again, just a few ideas that come out to mind. But what are those main challenges or primary challenges that you see impacting currently in the region?
So obviously liquidity's the big one for banks and local currency lending. Just to go a little bit into the individual markets. In Colombia, what we're seeing is the life cos are offering really long tenors with thin margins, which means the banks also have to step up and kind of match those. We're also seeing a trend towards no fees. In the tier 1 space, some covenant light deals. We're not seeing that as much in the tier 2 and 3 space in Colombia. In Peru, what we've really seen is an extension of tenor. So 7 years has become the norm when it used to be 5 years, and we're actually even seeing some corporates being able to go out to 10 years, even in the bank space. In terms of Chile and Brazil, what we really are seeing is that the lending market is really competitive, both in US dollars and local currency, and that they're really competing against the bond market. In Brazil, that's even more difficult because bank lenders have a tax disadvantage to the bond markets in Brazil. Mexico, what we're seeing is it really is hyper-competitive. And the result of that is that in the syndicated deals, the ticket sizes are getting really small, which means that your investment in time to actually do the underwriting may not result in a ticket size that really is commensurate with the work that you've done. In terms of local currency financing, that's definitely increasing, sometimes accompanied by wanting local law or even local language documents. So kind of the combination of those three can cause problems for international banks.
And foreign lawyers?
And foreign lawyers as well, yes. I think even in Peru, which has typically been a US dollar market, we've seen the gap between US funding cost and local funding cost has really narrowed to a point where recently we were actually seeing a 50-50 split for US dollar and local currency loans, which is really unprecedented. So I do think that a lot of the recent trends in the market are making it a little bit more difficult to do cross-border transactions and be competitive. We have seen some deposit-taking local banks that are actually able to offer rates on local currency loans that are below the cost of local currency cost of funds of some of the international banks. So that makes it almost impossible for the international banks to compete when those margins are getting that thin. Some banks aren't able to stretch the tenors to compete with international or the institutional investors or the capital markets, so that can often be a challenge. And then in terms of, if we're talking about the local law issue, I think we see that as being a little bit more country dependent, as some markets do have more well-established proven systems in place. That's not the case for some other areas. We see Chile and Mexico where I think there's more willingness to use those local laws than maybe some of the other markets. But we do definitely see a preference by borrowers in Chile and Brazil to use local documentation, which can certainly be a challenge for some international lenders.
That's interesting. Let me stop right there. I mean, the Euromoney team asked me to. There's a polling question in your mobile devices. So if you go through the app, now that we've shared these challenges, the question goes. I'm not sure if we can have the question there, but if not, you'll see it in your app. Is with these challenges, do you expect bond offerings and private placements with institutional investors to become a more attractive source of funding to finance corporate growth in Latin America during 2019? Bear in mind, this is interesting because we've discussed about a different landscape, a choppy environment, from a macroeconomic perspective, from a political perspective, from a compliance, regulatory perspective, and still, in discussions with many of you, again, many banks out there, this has still been, one of the most active years for them, right? Maybe not the, as I said, plain vanilla syndicated financing, but on different structures that, have made, those transactions possible at good, returns for the banks. So, and we're seeing results as we go. So let's see, how that ends. People tend to be shifting more to the markets. Okay, we'll change that eventually. Let's move into our last piece, and again, I know that time is the clock is ticking. So and I'm getting faces and signs. So let's just quickly go through what is what we see in the foreseeable future, right? And Jose, let me start with you. Again, do you anticipate that so those challenges are somehow the result of recent events, but now going forward, do you anticipate a more confident investor base, or do you see consistent with what has been on the screen at this point in terms of results? Do you see alternative financing sources to bank financing or to syndicated loans in the market?
I think we have volatility. We have a problem with the normal investor, because when you have the volatility in your portfolio, you have a problem with the value, just the value, not for much, but that's it. So, for example, we're trying to raise $400 million in the short term. I think the first quarter of the new year.
Is this intent to be an RFP for the audience here?
No.
If we see people chasing you all the way to the coffee store, okay.
No. But in this case, we would like to refinance something in our balance, because we think that the future are many challenges in the fixed rate, in the tax and the whole view in the finance for the corporates. So we would like to refinance today because we had a lot of chance to increase our business in the short term in Peru because, we'd have a very nice base for the environment though. But at this time, we receive many offers from both sides. We can go through the bond offering in the market, and we're seeing many structures there. It could be possible to issue maybe 15 years tenor, or it could be 20, which is nice. But on the other hand, we receive an offer from the bank side, 10 or 12 years tenor, which is very nice because it's more. We have more flexibility with the banks. So in our pocket, we can have almost $1.3 billion. So we can see many structures there. And on the other hand, the institutional investors at this moment in Peru, in Colombia, and Chile want to go through the big infrastructure side. So maybe the private placement it will be growth in the short term with a specific projects. But for us, it will be a corporate side, and we would like to increase that part of view.
Understood. So banks take note on that. Paco, fairly quickly, what do you see in the future again? How do you see this as a good opportunity as well to further diversifying your risk or mitigating your country risk by continue your expansion abroad and getting funding for that abroad in foreign currencies again, or what is anticipated? You have maturities coming up. And also another message for the banks,
for sure.
So we have to.
For sure, we'll be doing liability management next year. That's for sure. We will continue to search for growth outside Mexico. So inorganic growth in other markets in order to diversify will continue. We are committed to reach our 50% revenue share in the near future. I think we will be there between 2020 and 2021. So new funding opportunities, I think, will arise. I agree with what Yvette was saying regarding the hyper-competitive environment in Mexico. And also I see banks struggling with cost of capital. So I think that will open an opportunity for Cinépolis to go to the public markets.
Nice.
So maybe
I would love to see that.
I also would like to see that.
We've been waiting for that moment for many years.
So I think that moment will come. I don't want to say any period of time, but I think it will be soon. And also this will match our growth plans. So for sure we'll do liability management next year and continue our growth strategy going forward. We are committed to be the market consolidator in Latin America. So we would like to become or strengthen our position as the market leader in Latin America, and that will provide opportunities for banks and for us, for sure.
Understood. Thank you, Paco. Gonzalo, thoughts on funding strategy? I mean, you already went over a learning curve with the banks, on a very sophisticated product, or at least not necessarily, what we see every day on corporate financing. What is in the foreseeable future for you? What do you think, in terms of continuing that growth and expansion, which has been fairly aggressive over, again, a very short period of time?
Mm-hmm. Yeah, our funding strategy needs both, and needs capital markets and needs banks. Banks, as you were mentioning, are more flexible and are very good for us for our acquisitions and to finance growth. And once we have a stabilized portfolio of assets, the idea is to take that to the capital markets and different offerings. So what we are looking for, probably mid or end of next year, is have a sufficient portfolio again to basically to to go to the markets and do an ABS there. And then again, we will start with a new syndicated facility with banks to fund growth, and the cycle goes on and on. No?
And do you see the market for that? Do you see the banks being there?
Yes, now we do. Mm-hmm.
So I think we can close with Yvette. Again, there's refinancings, there's new financings in place. Again, there's mandates for potential takeouts in the market. I don't want to say with the EDCB there. How you see the bank? What are the opportunities that you see for bank financings in the region generally? Again, in the short term.
So I guess there's a few areas where we do see some real opportunities coming up. I think the first one, there's a couple in Colombia. So the first one is that there's a lot of infrastructure projects that are coming up in Colombia. Most of them will be seeking local currency financing. And the local Colombian Development Bank called FDN has just developed a program to help international lenders participate in the local currency funding market. So we do see some opportunities there. Also in Colombia, we're seeing a really growing interest for what I would call green transactions. We saw Celsia this year having issued the first ever green bond in Colombia for financing of its solar projects. We've also been party to some discussions where borrowers are asking to move more towards the European trend of offering things like decreasing margins for hitting environmental targets or milestones. So we think that's an interesting trend. In Brazil, the changing role of BNDES towards being one player and not the sole player in medium long-term financing, I think will open opportunities for other participants. So the reduction of subsidized financing is increasing the relevance of other players. I think the one thing that we do see as a potential challenge there, though, is that there's a strong preference for local currency financing, which may be difficult for some international lenders, particularly with the volatility of the local currency during the current election period. So a kind of a positive, but with a bit of a caveat. I think the other thing is we did see a slowdown of activity in the Mexican market during the election period and even now as the transition period's happening. So we do see for 2019, we do expect an upturn in the Mexican market.
Thank you, Vet. I think we don't have any more time. Do we have some time for Q&A? Any question on, if there is a question out there for any of our panelists? I think we can, that was as clear as it gets. So we can wrap it up. Thank you so much for joining again. Thank you, Gonzalo, Paco, Yvette. Thank you, guys.